Are you concerned about healthcare costs for 2026? And is there anything that can be done to affect it? Hey, I'm Tommy at medicalinsurancetoday.com. Fielded a bunch of calls and emails at the end of the week and over the weekend. And early this morning, I came across a friend on my way into work. Said to me, "What's going on with the rate increases for health insurance and the Affordable Care Act?" And I said, "Yeah, it's an unfortunate circumstance. So I wanted to do a video and get this out to folks. Just make sure that, give them my best foot forward in terms of information and staying informed of what's happening." There's a bit of a perfect storm brewing in healthcare, unfortunately, and there really isn't a magic bullet in terms of fixing it. So to talk on that, annually, healthcare rates will go up between 5 and 10% on an aggregate. So we operate primarily in California, and within California, that 5 to 10%, it's being advertised it's going to go up to a 15% aggregate rate increase. Now, to touch on that a little bit of detail, each insurance company, Anthem, Blue Shield, Health Net, Kaiser, Molina, all these companies that operate in California, they all have their own individual rate increase that they propose, and then the state takes all that information and puts out in the news releases the aggregate rate increases for healthcare. Now, on average, you're going to see a 5 to 10% rate increase every year. It fluctuates year over year, that aggregate number. And the aggregate number this year that's being advertised is 15%. Now, that is higher than it's been, I believe, in 6 years, is what I read this morning. So you're seeing, sharp rate increases and higher than average, and it's staying right on par with everything else in America. With inflation, we have the cost of housing, the cost of food, and the cost of fuel, and everything is just seemingly to continue to increase. So I don't want to be a total downer in this video. There is a solution to this at the end, but informationally, you're going to see your health plan go up. Now, this is not news that rate increases happen every single year. It shocks me all the time when people say, you've been a client of mine for 10 years. The rate increase is coming. Every year the rate's going to go up. Unfortunately, we all suffer to it, my family included. There's no magic bullet. Everybody pays these rate increases. Now, with that rate increase, that'll happen in January. You have the perfect storm that's happening right now is kind of the twofold component. In 2021, during the coronavirus pandemic, there was a large sum of money injected into these state marketplace exchanges, as they're called, to help people qualify for the monthly discounts. So to explain, in Cover California, we do a lot of California business. In Cover California, if you are not a high earner, you can qualify for a discount off the cost of your insurance. So if the insurance is $500 and you only make $30,000, you're only going to pay $100 of that premium or so, and there's variables to how that works, but that's how the system works. Is you lower income, you pay less of the monthly cost. Higher income, you pay more. In 2021, they extended those guidelines. So a family of 4 that made, 100 grand never qualified for financial help before. Now families that make 150, 160, even I've seen as high as $170,000 in a year, were qualifying for a little bit of financial help off the cost of insurance. Now, to use my personal family as an example, our healthcare premiums are a little north of $1,500 a month. We were fortunate through this injection of money, these federal funds that have come into the exchange, to qualify for a discount that brought our insurance down almost $500 a month on healthcare costs. So instead of paying $1,500, we've been paying a little north of $1,000 this year in 2025. The legislation that passed to inject these funds in 2021, it was written at the time that in 2026 they were going to expire. So now those families that make $150,000, $160,000, $170,000 a year, they're not going to qualify for any financial help, and it's going to go back to the same qualification standard of 2021. So that family, if you're over 100 grand now, you're probably not going to qualify for much financial help. So hence the perfect storm. You have these large rate increases that are happening, and you have the loss of federal subsidy for a lot of folks going into 2026. And it's going to be sticker shock for a lot of people. We're going to be really busy during the open enrollment. And to bring to you the solution of what the options are going to be for you and your family is to go and shop your plan and use an agent like myself, like our agency, Medical Insurance Today. It's a free service. So come October, November, December, that's the open enrollment time of year that you can change with no questions asked. So if you wanted to move from one plan to another, you can do that during the open enrollment. And I'm gonna advise it, and here's why. So you could be on a plan that sees a 20 or even as high as a 30% rate increase, while other companies are only going to experience a 5 and 10% rate increase. So you might be looking at your bill that's going to come in the end of November and December and saying, good Lord, help me, how am I going to make this premium? And you might not know if you don't go and look around, don't shop, don't use someone like myself to say, well, what's going on with this alternative option over here? There's going to be a number of companies that are not going to see as sharp a rate increases as others. I don't know those answers yet. Those are going to be released in October. So now we're just kind of in a waiting period to see what actually transpires this open enrollment season and what's going to come forth. So if you are receiving subsidy and you're a high earner, and you're saying, well, how did I get this discount? That could potentially be going away. And two, you can expect a sharper than average rate increase that's going to come in January for your New Year's renewal. So my solution is to call us, reach out to us. We're here Monday to Friday. It takes 15 minutes to do a little analysis. It's all free of charge to you, the consumer, to talk with us about, okay, here's what you have. Here's what your needs are. Here are your doctors. Here's your medications. Here's what is important to you. And then we look at available options. And then there might not be options. If you have health concerns and you're on a PPO and you have to stay with that PPO plan, you might just have to suffer the rate increases. However, especially for healthy people, and not just healthy people, but especially healthy people should look at it and say, okay, if my rate increase is going up 20% and this other company is only going up 5 or 10%, and you can save some money there, it might be worth your while to switch plans. It's going to keep us really busy during the open enrollment. When these turbulent times happen, we get really busy because people come looking for the help. And we would love to serve you and we would love to help you. So all of our contact information is below in the caption. Please reach out to us. We're in Costa Mesa, California, medicalinsuranceToday.com, and we look forward to serving you.